Good afternoon, folks. Tuesday, August 26th. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Only adjustment in my position disclosure is that I bought GLD. I'm long GLD. Long some gold. Long some gold. All right. Pretty boring session again today. We're actually up a decent amount on a percentage basis, though. Buys are up 0.5%, Qs are up 0.5%, IWM's up a full percent. So that's actually pretty decent move. TLT is down 0.25%. Bitcoin finished up 0.5%. Oil finished down 2%, and GLD finished up 0.75%. Gold finished up 0.75%. All right. So, yeah, I think Pat kind of described it actually really well into the close, saying that today was kind of like the opposite of yesterday, right? A little bit of a weaker morning, followed by a stronger afternoon, ending with a really strong close with a MOC buy and balance that came in. So the opposite of yesterday, right? Yesterday we had a strong open, then we rolled down, and then we sold off really hard in the last 5 minutes when MOCs hit. So interesting trading session. At the end of the day, even though it's a pretty big up move on a percentage basis, I don't think it changes the big picture too much. I mean, we just look bullish. That's pretty much it. We look bullish. We're building out a bullish consolidation pattern here in the SPYs. The Qs have yet to recapture any major levels still, so there's kind of a neutral category. You have to get above 176.50. And the IWM also looks really solid, albeit slightly extended. There were some concerns last night. Futures dropped for a little bit on the Fed Cook stuff. And even this language here talking about, and Trump used the language himself about having a majority, securing a majority on the board of governors. I've never heard language like that used before. That's really not supposed to be how it works. This is not a like Republican Democrat committee. This is not having a majority like you have a majority in Congress or have the Senate. That language to me I find to be extraordinarily disturbing, honestly. But the market for the moment does not seem to care, and cuts are probably coming in September. But the big thing is still going to be Nvidia, right? Yesterday was a pretty boring trading session at the index level. Today was maybe a little bit better with the upside movement, but not too dramatic. I think everything really hinges on Nvidia. The SPYs are bullish, the IWM is bullish, like we were saying. The Qs are more neutral. So there's a good chance. I mean, maybe Nvidia turns into a nothing burger. It's happened before, but it is the most important stock in the stock market, and there's a good chance that Nvidia's result tomorrow will enable the market to either get back above the the August 19th high for the Qs, which is 576.50, or work their way back down to retesting the 560 low. And those are our major spots to get the Qs either more bullish or more bearish. So still broadly neutral here, but everything else looks really constructive, and we'll see if it's able to break higher. The AI theme trade did take a little bit of a break. Pat's note, which I did finally catch up on. I hope everybody's reading this every day. Gave a great kind of overview of the reasons why. I think it lists 5 major reasons why there's been a little bit of a pause in the AI trade. So pretty spot on there, like usual from them. And that's pretty much it. From a trading perspective today, I've still been taking a little bit of a less is more approach to my trading, but putting in some decent singles and doubles. So every day trade I took today was positive. I didn't take a lot of them, but every one I took was positive. This EJT, I made some money in it, even though it ended up being disappointing by the end of the day. Traded it. Really, most of what I made pre-market, and then at the open they sold it. Created a little bit of a base here. ADMA caught up to that base. You wanted to see it boost off that. It did a little bit, but it never really squeezed back towards 19 or anything like that, which is what I really wanted to see. And I ended up, I had a I had raised my stop to this 10:35 a.m. low. I kept it there all day. I got stopped out of what I had into the close. So that was not a swing trade for me. And then I missed the SoFi short. I just kind of wimped out on it that we talked about for this like day four RDR. It worked fine. It worked fine. It triggered the RDR. I didn't take it. I even called it out in intraday into the VTF. It was a very slow trade, but it bled down into the close. If anybody took it, you made a few bucks. I didn't take the Jumai trade either. I wanted to be a little bit more patient on that. But now we got Jumai three big up days in a row. So if this thing can really get above 9 tomorrow, I might look at that for a short. I did end up, even though it was trading on news, so you always have to be careful, trading a lot of this quad U intraday. I got pretty heavy to the short side on this thing into like $13 and above $13 and was able to kind of capture that move as just a cute day trade off of the extension. Kind of, I called out this doji here first at 1020, which was a little bit too early. It made one more new high after that, but I was kind of watching the tape and it seemed like the algorithms changed a little bit as that doji came in. Not unusual to get, when you get an upside tail like that, when there's a lot of momentum to get one more push higher. It's kind of what happened, and then it gave an even higher volume, bit of an upside tail doji, and then that worked out pretty well. Super extended chart on the daily gave a decent upside tail. ADMA is down all the way at $10.42. So this thing probably needs a break, but it had good news for two trading sessions in a row. So that was a big focus for me intraday, and I did okay with that on the day trade. And then did get some gold and kept it as a swing trade. The chart in this GLD has been building out this bullish consolidation now for 4 months. And, I think that there's a potential that gold could move on some of this Fed stuff that we're seeing and talking about as well. So we'll see if this goes. It looks decent, but it needs to actually really break out of that pattern. I tend to not trade GLD. I prefer to trade the miners, but this GDX has already run so much, it felt very chasey to buy it. So I didn't want to get involved in that GDX here. Great opportunity to buy this bull flag. I didn't take that trade either just a few days ago. But gold's still in its pattern, so I bought a little bit of that. That's pretty much it. I think that we're kind of just waiting for NVIDIA. This is classic end of August trading here, kind of a less liquid tape that seems really slow at certain times on the intraday, where a less is more approach at the end of August, really through that first week of September, like last week of August, first week of September, tends to just be a really good idea. So that's kind of where my head's been at. But it's interesting that we get such an important event with NVIDIA's earnings in that last week of August, where we have less liquidity and we have less traders at their desks. So if you could get an event that starts to move this market, then this is an if-then statement. Then you got less liquidity and you can actually get bigger moves. So we'll see what happens tomorrow after hours, but most likely tomorrow will be another quiet one. Though you can never count out random headlines to come in this current administration that moves the market in one way or another. So you always got to be prepared for that. That's all that I got. I am happy to answer any questions anybody has. Or look at what you guys are looking at. Starting with Michael S. Thoughts on PayPal moving forward? I like the idea of filling the earnings gap. Yeah, I mean, I like PayPal as a company. Stock can be a little sloppy and tricky to trade. I was involved in that in the past off that April low. $70 looks like a nice level here. Fairly clean looking. You got to like the inside nut that happened on it today. So yeah, I like it to see if this thing can work its way back into those mid 70s. Maybe try to fill that earnings gap. Sure. DNA, yep, that's been one of the crazy ones in the past. I don't know if Kathy Wood's still involved in it, but she has been. This is a perfect classic cup and handle pattern. So thanks for bringing that one up. I think a lot of people mischaracterize that pattern. So yeah, big old cup here. Here's your handle. It's kind of building out as like the handles on a cup and handle pattern, usually like a descending bull flag type of pattern, descending channel flag consolidation pattern. So see if this thing can break up. 13 could be a starting point. I think 14 is more the confirmation spot to see the thing breaking up. So thanks for bringing that one to the radar, TG. We'll pay attention to that one. From Scotty, I am long UNH. How do I manage this trade after this news? The stock is so beaten down, but do we have further to go? I was up, but end of the day wrecked me. I got smoked, but I'm still holding. Yes, there was news, Varun. It was posted in the VTF about further investigations into Medicare or something. So you can find that there in the VTF. Yeah, so to answer your question, the first thing that I think is most important here, so first of all, I appreciate you asking the question. I don't like the way the question is construed, because the way that you're asking the question implies to me that you have parts of your game plan for your trade that are missing, specifically the risk management aspect of the game plan for the trade that you're involved in. There are no such things as a trade that works with 100% certainty, and every trade has to have a risk management aspect to the game plan. And from my experience in this trading business, the number one reason why traders do not become successful is because they fail to have good risk management game plans, and or they fail to be able to follow them with good discipline consistently over time. So the question shouldn't be how do I manage the trade after the news? The question should be how are you planning on managing the trade before the news? The news doesn't matter. The news doesn't matter. It doesn't, because you were in it prior to it. So you should have had a game plan in place for what am I going to do if my trade works? What am I going to do if my trade fails? As soon as you got into it. So then if news were to come out, news can come out on any stock, any index, anything at any time when you're in it. So you always have to be prepared in advance for news that can come out that will sometimes be in your favor and sometimes be against you, and then you need to know exactly what you are supposed to do in those situations. So that would be the biggest thing. I don't think it's a question of how do I manage it after the news. It's how do you game plan to manage it prior to the news, and you continue to follow that. Were you planning on stopping yourself out at the low of this consolidation? The absolute low of the consolidation, it looks like it is from April 15th, which is 294 spot 71. Did we break that today? We did break that today. So were you supposed to be stopping yourself out at 297 spot 70 at that low? Was there a different low that you were using as your stop? And if you were supposed to, and it broke that low today, why didn't you? Um, Honestly, the UNH news was not great for the stock. It hit it down from 307 to 298. What if that news was even significantly worse? What if it didn't stop at 298? What if it didn't stop at 294, which I guess was the intraday low of the immediate pull lower? What if it kept going to 285, to 280, to 275? I've seen news, if you've traded long enough, you've seen news in stocks that have done damage. I mean, this thing even itself, back in the May situation when the news was coming out, look at this one day, right? Traded all the way down to from 308 down to 248 in one day. What if the news that hit today had a similar level? It doesn't seem like it's as bad as that, but what if it had a similar level of impact to the stock that hit it down to retest 240 intraday today? Are you just going to be holding and praying and hoping? The bottom line is that you need to have a game plan on that trade prior to entering it, and that game plan includes the possibility of news coming out. So that'd be the first thing that I would say to you. The second thing I would say is that if you don't, we can work on building one. You should, but if you don't, we can work on building one. I don't know what your size is. I don't know what your risk tolerance is, but for me, if it was my trade, I would not be giving it past today's low. Today's low bounced a little bit off of that. It's roughly still holding this ADMA on the daily chart. I would not be giving it past today's low, which is 294 spot 20. A lot of big hedge fund people bought this thing. They could be wrong. They could endure potentially a lot of pain on it, right? We've seen that happen in the past as well. So I really hope that helps. I appreciate you asking the question. I hope it doesn't come off as me coming off particularly hard on you, but we want to help make and save you money, and it's a lesson I think that applies to everybody here on the team because I've had news come out on me in both directions so many times over the course of my career. Sometimes with me and it's great, sometimes against me and it's not, and you just have to have that built into your game plan in advance. Uh, Big print in GLD. It looks like that was probably the closing print. TG giving us a couple other names to look at. RCAT. Um, Going back to support, $10 is like the really big breakout on that. I actually don't like that this RCAT failed back down through that 10 and closed at lows today. UMAC, I've been looking at this UMAC myself. This I like better. A pullback to kind of retest a previous breakout to hold as support to be able to buy. So I like that UMAC chart. Thanks, TG. Good stuff there, Scotty. Good stuff. Popping over to the YouTube, seeing what's going on over there. Any thoughts on GoPro? Not really. This is another one of these meme squeeze stocks recently. I don't know if there's been any fundamental events that have made it worth 100% more than it was down there. Maybe it was a value trap to begin with. I really don't know because I don't follow the stock. But big day two today. It did seem like both yesterday and today we were seeing a lot of that short squeeze action ongoing. So I'm not surprised to see this. This was one of those stocks back in here. I think that eventually, these crappy stocks when they run will fade back down. I really do. Maybe not all of them 100%. Sometimes there's some value that actually gets unlocked in some of these companies that people just didn't realize ahead of time. But I would say if you're long this thing, hopefully you're long from like $1.40 or better, not chasing new price up here and just trim and trail because you should book profit on the way up because there's a good chance that this thing's going to eventually fail. But it's also not impossible for these squeezy names to squeeze to $4 or $5. You almost never know, especially if it's a low float and high short float name, which I don't know if it is or is not with GoPro. I'm pretty confident it's not a low floater, but I have no idea what the short float actually is. From Tyler, do you use the same position size for each trade or do you size up on A+++ trades? So I'm a big believer in what I call risk skew. Risk skew basically means that the higher you grade the trade, the more risk you give it. And you grade trades based on the potential of their risk reward as you see it, and the probability of success based on all of the layers of probability that we like to look at, such as the market, time frame continuity, relative strength, consistent bullish option flow, a bunch of other one-offs in there. Time of day, it's another one. So the better the risk reward possibility, the higher the probability of success, the more risk I want to take in it. And if you have you should have like a daily maximum loss, a daily set amount that you're willing to risk in a day, and on an A+++, as you describe it, it might be worth it to risk your entire day in that one trade. But a lot more often, you're going to be better off spreading that risk out over the course of several trades. So, maybe if your average max loss is $500, you risk an average of something like 125 per trade, 150 per trade, but that could skew all the way up to an A+++ being all 500 down to a C type trade that's still worth taking. Maybe you're only risking $50 or $75 on it. Appreciate the question from Tyler in the YouTube. Back over into the VTF from Ryan. Quick plug for the work of Darius Dale. I have not heard of Darius Dale. I've been following his work for a while, and I'm finding his macro research top notch. To your comments, Trump and the Fed, Darius has been talking about regime change at the Fed and what it means for asset prices for a hot minute now, sharing his appearance on Macro Voices last month for any traders that are interested, as well as here's a couple slides from his report. Thank you for that, Ryan. I'm going to check that out. Yeah, I have almost as many questions as answers right now on what some of this stuff means for the markets, honestly. This Fed majority, which that term really makes me want to be sick. But you know, if we had 3 percentage points of Fed cuts, a percentage point at a time, because of a Fed majority, whatever that means. Like, what does that actually mean to the market? Like, I, my thought process would mean I don't see how something like that wouldn't lead to extremely rampant inflation, to be honest. And that's happening at a time when we're already seeing inflation move up on its own, or the chatter, which I do not think will happen. But we saw a big boost to the market into the close on chatter of tariff checks getting sent out to the government, like getting sent out by the government to people. And I don't think that's impossible because, kind of the concept of buying votes. I don't think it's impossible, but I'm going to put it as unlikely because, at best, we saw that, I think it's the CBO put out data the other day that said that tariffs will reduce the deficit by something like $4 trillion. CBO has also put out that the big beautiful bill will increase the deficit by 4.1 trillion. So that to me seems like almost a best case scenario of like a perfect offset. Um, I'm not personally as bullish on that as the CBO is, but if we want to just take their numbers, that becomes a perfect offset. But you do still have a debt problem even on top of that. So I just don't understand. I just that's why I view it as fairly unlikely for the supposed tariff checks to get sent out. Remember there were supposed to be Doge checks at a certain point in the past as well, but then that chatter disappeared. But if it were to happen, the only other time that we've ever seen anything similar to that was during the COVID period when they were sending out COVID checks. And that was one of a few factors there that really led to the inflation problem. So, all of a sudden, if we cut interest rates by 3% while we have tariffs, which increase prices while we're handing out tariff checks to people. I just don't. I just think that could lead to potentially really rampant inflation. Now, what does that then do to the equity market? I don't know. I really don't know because on the one hand, the equity market could inflate with it. On the other hand, you would I mean, the whole reason why the market went down in 2022 was not because of inflation. It was because we raised interest rates to fight inflation. Really, I mean, you just destroy the dollar and you eventually become like Zimbabwe. But if you wanted to just say, "Hey, we're just going to leave inflation at 9%," hell, I'm take Turkey as an example. Inflation's going to go up, and we're going to cut interest rates and spur even more inflation. You do things like that, the stock market could move up just because it's an asset as well, and it inflates along with everything else. Um, so I don't know. It's just a really, really interesting situation. And again, in 2022, the only reason why the market went down was because we raised interest rates faster than had almost ever been done in history. Big shout out to Jerome Powell on having the tenacity to do that, and it worked. It was personally, I don't think I think I don't want to give him too much credit. I think that part of it was just supply chain normalization that helped to bring inflation down, but it was also him increasing rates in a way that had never been done before. So, what happens if we have just this ultimate populist administration ongoing that inflation becomes rampant, but they don't want to cut rates because they don't want to endure the pain that we had to go through in like 2022 as an example in order to be able to bring inflation down. I don't know. It's a pretty crazy situation. And that is all part of the thought process. I think that helped lead to me starting this GLD position. Um, so, I don't know. We'll see. But I really appreciate you providing that, Ryan. If you respect them, I appreciate that, and I will check it out because I am trying to figure out the answers over here myself. Really am. All right, gang. Anything else for today? I don't mind doing a quick one. We're just all waiting for Nvidia. It's a slow week. Let's talk about the Tesla 350 breakout. So So Tesla 350 is a really big level. It's starting to break out into the close and after hours. The problem with buying Tesla 350 right now is it reminds me of the Tesla 338 breakout that we had been looking at uh, as a potential buy point back here on August 11th. The problem with buying that was it was a day four to the upside when the buy trigger actually occurred. So it's not surprising to me that even though it boosted up to almost 350, that it eventually stalled and had a pullback, and that pullback was probably bigger than it would have been otherwise because the market itself pulled back also. Otherwise, this thing probably would have pulled back to 330, 335, created a pivot low, and then continued higher. But again, the cues weakened, and that pulled Tesla back even further. So 350 is a nice juicy level here for breakout continuation, but I don't love the idea of buying that on a day four when it just went from 320 to 350. And that's just me. I miss trades sometimes because I don't like to chase. But what I've learned over the course of my career is that you're better off missing trades than getting involved in trades at spots where you have a worse risk reward and lower probability of success because it's about what pays you in the long run. And similar to this 338 breakout, you could have managed this trade well enough for sure to make money on it. If you bought 338 over the course of a couple of days, it went to as high as 349. But I'm not surprised as well to see that it eventually had a steep pullback just because of the degree of extension into the actual breakout itself. And that's always the problem with buying extension. You really need momentum to come in. But Tesla's been having the crazy bull flow, right? It's been having that crazy bull flow. And when Tesla starts getting the crazy bull flow, you really don't want to be on the other side of it. We've seen that story, we've seen that movie before, for sure. If anything can get crazy, Tesla can. Doesn't matter. Good news, bad news, nothing matters with a few stocks, and this is definitely one of them. Um Sky T? Is that tell me it's moving on this headline. I don't even know what this company is. Pay to play. We are in the pay to play economy. They want to get a deepening relationship with the Trump administration, so why not jump up 10%? All right. Anything else for today? Uh, from old YouTube. With someone of your tenure, what makes you uninterested in low float, low market cap, news related bullish momentum and penny stocks around the open, fundamental and technical reasons for good trades? What makes you, I'm not necessarily uninterested in I actually think it's the opposite. I like being long, low float, especially high short interest breakout trades. I don't like things that are super, super cheap because just because of the amount of shares that you have to buy on them. I really don't like trading stocks that are like definitely not sub a dollar, sub $2, where I gotta buy 100,000 shares of the stock and to catch a 10-cent move. That's just not really where my edge lays. But if you want to show me a $2 to $10 stock that's got, a lower float and a high short interest, I don't mind buying those at all. I was just picking myself for not being involved in EFTY this morning, which this is a super low floater that just had a crazy squeeze from its recent IPO. So I got no problem being involved in those. But I don't like them to be too cheap where I got to buy an insane amount of stock. Cool. Appreciate the compliment. All right. I think we'll be wrapping it up there. Yep. Have a great night, everybody. I'll see you all tomorrow.